Netflix crashed over 19% after they reported earnings today, and it was one of the stocks that we were really expecting for the earnings, as it was the first big cap stock or tech stock to report earnings. Hello everyone, welcome back to the channel. Today we're going to talk about Netflix, what happened with them, why the stock is crashing that much, what did they report, and more. If you're new to my channel, welcome, but let's get started. So first of all, we can see here that Netflix is down 19.30% after hours, even though it was already down 1.48% during the market hours, and it is trading at $410 per share with a market cap of $225 billion and a PE ratio of 45.83. I do have to say that I have mentioned this before. We obviously can see that the growth that they have been having quarter over quarter has been impressive, and obviously year over year as well, as we know that they obviously got really benefited because of the pandemic. But what I wanted to show you guys here is their PE ratio. We can see that it is actually down this year. It has been in a downtrend since 2016, but we do understand that now there is way more competition in the market or in the industry than 5 or even 10 years ago. But let's see what they reported, because first of all, we can see that according to CNBC, Netflix shares fall 18% on slowing subscriber growth. They reported earnings per share of $1.33 per share versus 82 cents expected, which is definitely incredible in my opinion. And their revenue was just what analysts were expecting at $7.71 billion. But their global paid net subscriber additions was 8.28 million in comparison to 1.19 million subscribers, which in my opinion is incredible. They beat analyst expectations in everything, and in revenue they match analyst expectations. Slowing subscriber growth led to the stock to dip in the after hours. In Q4 2020, Netflix added 8.5 million subscribers. The company also said for the first time quarter of 2022, it expects to add 2.5 million subscribers compared to the 3.98 million they added in Q1 of 2021. Netflix said it plans for a more back-end weighted content slate in the first quarter with big premieres set for March. We can see that the Netflix subscriber growth is for this year, the fourth quarter, was 8.3 million in comparison to the fourth quarter in 2020 was 8.5 million and 8.8 million is in 2019. But we can see that it is definitely recovering quarter over quarter, as in the first quarter of 2021 they saw a huge growth of 4 million subscribers. It dropped a lot in the second quarter, and in the third quarter it finally recovered, and the fourth quarter was a nice growth quarter over quarter. But we can see that 8.3 million is not even above what they were doing pre-pandemic levels, which obviously is a little bit weird but normal at the same time, because we know that during the pandemic in 2020 they saw huge growth. We can see here that in the first quarter of 2020 they had a growth of 15.8 million paid subscribers and 10.1 million in Q2. Obviously in the third quarter they only saw a growth of 2.2 million because we didn't know what was going to happen with the economy. We didn't know how the pandemic worked or what the COVID-19 was, or we didn't have any vaccine or test or anything. But then in the fourth quarter of 2020, we definitely saw a nice growth, but still 2021 is not at pre-pandemic levels, which is what many are scared of at the moment. We do have to take into consideration that there are a lot of competitors in the industry now. For example, there is Disney, which we can see that the stock dropped 3.94% after Netflix reported earnings after hours. As we know that last quarter, Disney saw a decrease in a slowdown in their subscribers growth as well. And analysts or investors might be expecting after Netflix reported this slowdown, will happen the same thing for Disney. But we just have to wait and see what happens when Disney report earnings. Consumers have always had many choices when it comes to their entertainment time. Competition that has only intensified over the last 24 months, as I was just saying, as entertainment companies all around the world develop their own streaming offering. while this added competition may be affecting our marginal growth some, we continue to grow in every country and region in which this new streaming alternatives has launched. What I just said, there are way more competition in the industry that what they was in the industry or what they were in the industry about 5 years ago or even 2 years ago, because Disney Plus launched in 2019. So Apple TV Plus launched, I believe it was in 2019 as well, or even 2020. So Netflix was like the main company other than YouTube, for example, for streaming, for TV shows, movies, and more. But now there are way more competitions with a lot of different companies. Now, they did mention that Netflix announced price increases in the US and Canada last week. In the States, the monthly cost for the basic plan rose $1, the standard plan $1.5, and the premium one was $2, as Netflix strategy is to increase prices as customers become even more entrenched in the company's exclusive content, because we already know the same thing is happening with other companies. There is a limit of people that are able to first have internet access, second have Netflix access, as there are some countries that do not allow this type of companies, and third, to be able to pay for Netflix, because a $10 Netflix subscription, it might be cheap for the United States, but it's not that cheap for other countries. That's why the price in other countries is cheaper, but still, there are not a lot of people that are able to pay this on a monthly basis. And even we know that we all use family accounts. For example, I use my parents' account, but in that account, we have my sister, my other sister, me, my mom, and my dad. So 6 people use the same account. If 6 people were to pay different accounts, that would be another history for Netflix and for all of the other streaming platforms. But it's not like that. Everyone shares accounts, even with family and friends, not only family. And that's a thing that Netflix has been trying to fix, but it's not possible, or at least I think it's going to be really difficult for them to know if someone is using the account that lives in the same household or not. So that is definitely a problem for them. But we can see that they achieved several milestones, as we know that they had the Squid Game TV show that was huge for Netflix in 2020, and that's why they had several growth during that period of time. They reported a revenue of $7.7 billion, which was a 16% growth year over year, and their operating margin was 8.2%, which we can see that is actually down quarter over quarter. It's actually down in comparison to the other quarters, but still the company is growing 16% year over year, and we already saw here the growth that they have been having quarter over quarter and year over year, as we can see that they reported $7.something billion in the quarter, and last quarter they reported 7.4. So it was basically a nice growth as well, quarter over quarter. They are expecting a growth of 10.3% for next quarter, quarter 1 2022, of $7.9 billion, and their operating margin to be 22.3%, which in my opinion is excellent. Now, their global streaming paid memberships grew 8.9%, and they're expecting 8% for next quarter, which is why the stock dropped this much, because we can see here that for quarter 1 2022, they forecast paid net adds of 2.4 million versus the 4 million that they added a year ago. Something very interesting is that the Google year search in 2021 for TV shows and movies, TV shows were almost most of them from Netflix, and movies only 2, but TV show was huge for Netflix in my opinion. As to be honest, I like way more TV shows done by Netflix than movies. And something very important that I like to watch in their earnings is this chart. We can see that in United States and Canada, their paid membership grew 9%, as we can see here, to 25 million subscribers, which finally was a growth quarter over quarter and year over year again as well. But the growth is not as big as it used to be. As we can see, it was 10% last quarter, 10% in the second quarter, and so on. But then in Europe, Middle East, and Africa, they grew 5%, which again was lower than the rest of the year, where we can see that it is kind of normal for the fourth quarter to see that kind of slowdown. Still, they grew 3.54 million additions. Then in Latin America, they grew 14%, which in my opinion was incredible, as we can see that in fourth quarter 2020, where they had a decrease in first quarter and then starting to grow. But we can see that finally there are growth of 14% in Latin America. And last but not least, Asia Pacific, they saw a decrease for the of 1%. I do have to say that we can see that average revenue per membership increased a little bit this last quarter from 14.68 to 14.75 in comparison to Europe, Middle East, and Africa actually decreased 1 cent. In Latin America, it increased, and Asia Pacific, it decreased. I do have to say that 75.22 million people that are paying for Netflix at the moment in the United States and Canada, all that Netflix can do, as they said in CNBC, is to actually increase their pricing on a monthly basis. Now, I do have to say that I'm currently not investing in Netflix, even though I have tracked their company and the stock for so long. I never added to this position. I never added to a position to this company, but I believe that in the long term, they might have a nice growth, but we can see that it is not expected to be that much. As for example, analysts are expecting this company to have a growth of 18.80% in 2021, which we are going to check right now how they did, and for this year 2022 of 14.40%. So obviously the growth is not 30, 40, 50%, but it's still a nice growth. I do believe that they will need to continue elevating their prices for their monthly plans, as it is one of the best strategy for them. But that is something that we will have to wait and see what really happens. Now, let me know in the comment section below, what do you think about this earnings? I do have to say that this is kind of concerning, but we continue seeing a nice growth from the company. I'm very anxious now to know how the rest of the big cap tech stocks did, so I'm looking forward for their earnings. I will leave you here a video on Bank of America earnings, and here for you to subscribe to my channel. Thank you and see you next time.